Hey guys, welcome to a review of the April 11th 13 market moves daily and some really cool stuff that we're observing today on April 12th pre-market. Guys, this is a time to get really excited because we're observing some very interesting things that could turn to be highly profitable here over the course of the next 72 hours. Now, the top three observations for the day. Guys, the market is definitely struggling around this 2890, 2900 level, but we're witnessing that there is a possibility of a failed breakout. In other words, we could go slightly higher, maybe 10, 20 points higher, and that breakout could easily unwind really, really fast. So I know it takes extra patience in the stopping formations, and I know everything today pre-market streams to a market moving higher, and we're going to cover that in just a second. However, do not be fooled because sometimes these breakouts could easily fail, so which represents an insane opportunity because again, the options premium, they deflate, so you get some really great deals on the put side. Now, the number two observation is yesterday they actually were buying the financials heading into the earnings announcements today pre-market. So far, JP Morgan announced earnings. We're still waiting on the Wells Fargo at the time I'm recording this. So not all of them have recorded yet, but we're noticing some really cool observations already. So we're going to talk about that in just a second. The third observation is actually not from yesterday. It is from today. Netflix versus Disney. Disney shares are up. Their streaming service is only going to be $6.99, significantly cheaper than Netflix. So of course, this is a really cool correlation type trade. Disney up, Netflix down, and yes, we are actually considering doing something on the put side on Netflix, and we'll break down the trade in just a second. Now, here's what's going on in Japan. The market is up pre-market today because Japan is up. Remember, in the last few videos, I have talked to you about how strongly S&P futures have been correlated to the Japanese market. So this morning, out of the blue, Japan decided to rally 300 points for no obvious clear reasons. But again, if we look at the chart of Japan on daily, we're actually hitting some major resistance levels. So this may be just the last move higher before the ultimate failure. So Japan up 300 points pre-market today on April 12th does not mean that all of a sudden we're heading significantly higher, but the correlation between Japanese stock exchange and the futures, the S&P futures, have been so phenomenal that yes, the markets are up pre-market. Now we take a look at the chart of S&P as of April 11th, yesterday. Look at how tight the trading range has been. Normally, guys, especially if you're new to trading, this type of trading happens right before the market is either break substantially higher or lower. So they do trade in tight trading ranges like that, but they don't trade in those tight ranges forever. So we're very close to a significant move to the upside or the downside. Now, we continue to observe various divergences. The one that's easy to observe right here on this particular chart is the divergence on the volume. We keep moving higher on decreasing volume, which is not bullish. It is actually bearish. Let's take a closer look at the three. This was your homework, guys. So let's see how well you have done in this. On PNC, okay, which is one of the regional banks. The goal was to make observation about how this company has been trading in the last few days prior to announcing earnings today. So here's the deal. Last 3 days, we had one move, 1 day lower, and then last 2 days, the stock have been consistently moving higher. Now, I'll share one really cool observation with you. I noticed some pretty strong activity. Somebody was buying not 100 puts, not a couple hundred puts. Somebody bought over 1,000 puts on PNC that expire actually next week in the 125 strike. So pretty solid trade. Okay, we're not talking about $1 million trade, but it's up there, in the $500,000 mark. So 125 PNC puts, noticing different volume, particularly in the 125 strike puts for next week. Now, historically, if we study PNC, actually last particular report, PNC dropped substantially after announcing earnings. And this chart, again, I would be very much inclined, especially observing the put activity in this, if it does rally higher intraday today, I would be very much interested in buying some puts on this thing here. Now, let's see. Actually, this is what PNC has done so far pre-market. So after the earnings announcement, look, it rallied higher. So in the initial reaction, again, when we're observing these earnings reports, guys, your goal is to make sure you understand what is the few days prior to earnings announcement, how does the stock behave, and what is the initial reaction. Now remember, the initial reaction in a lot of stocks is not going to be the true reaction. So far, what we have seen in PNC is it went higher to a level of 131, which basically in the last 2 days from 125 to 131. So if it goes intraday, let's say to 131, again 132 level, that would be an interesting level to acquire some puts. Now, Wells Fargo, what did you guys find out? Last 3 days, as you can see, it has been selling off going into the earnings. Last 3 days, represented by these 3 red candles. 1, 2, 3. So it's going lower, going into the earnings. On what kind of volume, guys? The volume is going significantly higher. Okay, very, very interesting observation. So far, Wells Fargo has not announced earnings, but in solidarity with JP Morgan, which we're going to review next, it is actually up for the day. So 3 days sell-off on huge volume. Just remember that is a very important behavior to observe, and let's see what actually Wells Fargo is going to end up doing today. If it goes higher and lower volume, again, the reversal could be very likely. And so here's the hero of this morning is JP Morgan. Okay, beaten on earnings, beaten on sales number, just, a fairy tale in the banking world. Okay, here it is. But for those of you who may not know, JP Morgan has been beating earnings expectations from all these goofy analysts now for a variety of quarters, multiple quarters. I'd say like 10, 11 quarters in a row it's beat the expectations. Now, one thing we do know, however, that every time it has beat expectations, the stock has actually failed to rally. So not initially. Actually, the initial reaction of JP Morgan is such that initially it does go higher, but then it typically sells off the very same day. So could this be an exception to the rule today? We're going to find out. But before I'm going to show you specifically what JP Morgan is doing this morning, I want you to pay attention on these longer time frame. I want you to pay very close attention to this level right here. Point 1 right here represents a level about 110. Point 2 right here represents a level of about 110. Also, as you can see, represented by this black candle right here, followed by a what? This level of 110 was followed by consecutive drop. This level right here was followed by a consecutive drop. This level right here now was about 106, and this level right here is about 108. Every time it has hit those levels, what has happened to the stock? It dropped. The behavior of JP Morgan going into the earnings report is the same as PNC. So first day out of the 3 last days, it actually went down. Second day, they started buying it. And third day, yesterday, which was April 11th, they were buying the heck out of it, okay, going into the earnings report. So the behavior is such, if we look at the 3 initial key stocks from the financial sector, they are actually predominantly buying them going into the earnings. So that is the behavior so far. We have only one stock, Wells Fargo, which predominantly has been selling off going into the earnings report. So here's what's happening with JP Morgan pre-market. Pre-market, JP Morgan is up. Notice to which level. It is getting close to this danger zone of 109, 108. So if it does get to a level of maybe 110, 111, we actually have a high probability of it reversing and dropping from there over the course of the next few days. So as bullish as things may seem, oh, it beat the earnings, it's done this, it's done that. Guys, it does that every freaking time. And as I've shown you on the daily chart, it fails to go above this level of 110, 111. So we're considering this trade shorting JP Morgan when it hits 110, 111. If it does break above 112 on strong volume, we would be closing out the position. Now notice, trying to execute this trade properly, don't just go and put a huge position at the 110 level. Start stepping into the trade. Buy a few contracts, it goes to 111, buy a few more, 111.80, buy a few more. If it breaks above 112, let's say it goes to 112.28, close it out. So that way you keep your losses to a minimum. But if the reversal does come as the charts on throughout the history, then this could be a highly lucrative trade, because I promise you, as JP Morgan shares rally, those put options are going to cost you literally pennies on the dollar. And again, considering that the observation is such that it could begin to sell off the first day after the earnings announcement, after initially going higher, but it does a major move lower over the course of the consecutive 3-4 trading days after that. So that gives you an answer to the question, what time frame should you be buying? Should you be buying today's expiration? Yes, possibly, but you're probably going to be doing much better if you were to make this observation on the chart of JP Morgan, that it really makes the bigger move lower over the course of the following 3-4 days after the earnings announcement. So if the history is going to repeat itself this time, then you're better off buying next week's puts as the stock continues higher to a level of 110, 112, but not higher than 112. There it is. Okay. What's going on with Disney this morning? Guys, Disney is up hugely. I don't think we've actually had such a huge move in Disney in like forever. So this is actually significant. Announcing the streaming service, everybody's excited. Everybody's celebrating. Everybody besides Netflix. So I told you it was a nice negative correlation type trade. So Disney up, Netflix down. What would be the significance of this? Well, the significance of this down move in Netflix, if we take a look at the daily chart, right? On daily, this is what's been going on with Netflix. Netflix has been going sideways forever. Okay, last 4 months. Basically between 350 and this 377 level. So historically, we're to look even at a longer time frame, this has been a major resistance level for Netflix, about 380. As you can see, every time it's coming down there close to that level, it fails to break above. So on one hand, Netflix is going to announce earnings on Tuesday. On the second hand, we know that general behavior of Netflix is to actually sell off going into the earnings announcement. So if we combine the catalyst that it is beginning to sell off, there could be some more room to go lower in Netflix. And where can it go? Well, it was at 367 pre-market. Right now it's at 364, 363 level. It could easily hit 358, 355, 358, 355 before actually going into an earnings announcement. Considering the historic behavior of Netflix selling off going into the earnings, this trade makes sense. And now that we've got the catalyst, it's actually fine to buy 2 days puts, expecting maybe another $5 lower from the current level. Again, pre-market, as I'm recording this, it's like a 264, targeting maybe a $6 move lower from here. Now, if you buy next week's puts, then be very careful, because, I mean, of course, you're going to pay like 5 times more for those than the ones that you're going to be able to buy for today. And if you are considering trading it today, then just make sure you keep your position small, nice and clean, and because it is a risky position, because it could easily stop and go maybe just a couple of dollars lower from here. Now, it could completely unwind and hit this level of 350. Now, that's a low probability, okay? So in order to really profit from this trade, guys, the easiest thing to do is to do what? Just buy in the money, right? If we were to examine VIX in just a bit here, you will see that VIX continues downtrending, and the proper action would be to buy puts in the money in this particular thing, because that's going to increase your probability of actually collecting a decent profit. So in the money would be 365 strike puts, 367 and a half strike puts that expired today. Basically buy them at market open, or buy them, let's say if Netflix opens at 363, 364 and it goes up $1 or $2, okay, that would be your perfect entry point, because the probability of a sell-off is still great. Now, so many streaming companies are coming out with similar products, better pricing, more flexibility of choices, what the customer gets, or can select what the customer gets upon what they want. So there's going to be some pressure on Netflix. Now, the quarter could be great, a lot of good things. I'm not trying to make a prediction yet of how Netflix is going to act right after the announcement, but there's just too much pressure on the stock right now. For the purpose of today, April 12th, it just would make sense to just go ahead and buy in the money puts. Target smaller size move, but it's pretty much, historically, we know it has a high probability of selling off right before earnings. Now we've got the catalyst, guys. It appears to be quite a simple trade right here. Now, let's review the market moves. Okay, the market move for April 11th was logged as a 5. Now, in the brackets, we do observe the behavior of an 11, so let me explain for those of you who may have questions about this. The reason why we highlighted these 11 is because if you combine the pre-market action yesterday on April 11th, you have this pyramid. Remember, anytime we get a pyramid, it is a behavior of 11. It is behavior of a top, okay, and particularly important in moves 6 and 11, which are your topping type moves, you will have an acceleration on the volume on the sell-off. That's exactly what we'll get right about lunchtime. You see this huge drop right here. It's not huge, but in relative basis, market has not been moving a whole lot. So this move from 28.96 all the way to 28.86 appears like a huge move in the chart. So we're talking about a 10-point drop, literally within seconds. But the importance of these drop is this. Look at the volume. Okay, so as cheery as the markets are looking today, let's not forget that these guys were selling. And chances are that these guys that were selling yesterday are going to continue to sell today, which could prevent the market from making like crazy substantial moves higher, because clearly this behavior is telling us that there are people taking out the money out of this market. Look at this move right here. Look at this other move. The importance of this move earlier, even though the magnitude of the move was not as great, look at the volume. You have these spikes on volume during the day, intraday, when the market is actually selling off. Guys, very important stuff. At the very end, the sell-off right here at the end, look at the spike in volume. Guys, this is important to pay attention to it because a lot of people could be fooled by this bullish action today pre-market, but there's still just too many signs that are out here. Shouldn't be ignoring, but we should be using these signs to our advantage. Okay, the 2-day sequence is 10-5. So basically, it looks like the market is rethinking. They are not sure, which we kind of talked about that because, yes, they are waiting for the earnings. They are waiting to see how the first few days of the earnings season are going to go, how the first few big companies are going to report. So observations from today, as far as the financials and how they're actually going to close the day, observation from companies like Netflix next week is going to kind of set the tone for what the market is going to do for the course of the next month or two. So guys, I need you to really pay very close attention. Look at a ton of charts. At some point over the weekend, each one of you will get, our weekly watch list. So you can start looking at charts and making some really good observations about the companies who will be announced earnings next week. Now, the 5-day move is quite interesting. Actually, this is the 2-day move, right? So we have a continuous repetition of this 11-type behavior where we have a pyramid. So this is how your 10-5 sequence looks. But if we combine the pre-market action, right, every time we go into this 2,900 level, we drop. 5-day sequence, 1, 4, 3, 10, 5. This is how it looks on the chart. We look at including all the pre-market, after-market action. Now we're getting 4 pyramids. Okay, so combining this information, it tells us, hold on. If we look at every part where the market has been selling off in the last 5 days on this chart, we have an acceleration in the volume on the sell side. So that is what is preceding this pre-market move higher today, which could make it actually unsustainable because once the market opens, we could see a reversal. Now, things are looking awfully bullish today, guys, but you still got to be extremely careful because it doesn't mean that move higher is going to be sustainable. So VIX is low numerically, 2nd day downtrend resumes. So this is April 11th VIX, 13.2 is where it opens, 13.39 is the high, it finishes at 13. So really tries to hold this 13 level. This is how it looks on the chart, but just clearly solid downtrend over the course of the 2 days. And now what we're getting pre-market, guys, it actually does break below 13. So it does break, VIX does officially break this key level of 13 that we have been watching over the course of the last week. At the time of the recording, it's at 1244. Now, if the reversal comes some point throughout the day, then VIX could easily regain that 13, but at this point, it does not look very promising. Okay, we have, semiconductor stocks are reaching for all-time highs like AVGO and stuff like that. So things are just, nobody just can seem to, stop the bulls at this point. So with that being said, it's a difficult market to trade, but there's going to be a ton of opportunities if the reversal does materialize, and ton of opportunities with all these earnings reports that are coming up. The projections for the next market move is 172. 2, considering that reversal that could come in, which could be a highly profitable trade. And 1 and 7 clearly in a sequence of 10, 5, 5 being actually a bullish move. This would be a continuation of the bullish sequence 10, 5, 1 or 7. As a word of caution, be very careful, because if the market does start to reverse at some point intraday, this move 2 and 7 could be easily confused. I certainly confused them myself in the last a couple of instances over the last week. And so be careful in learning my mistake that, look, it's not just because you're going to see a sell-off, it does not mean that these bulls are not going to come in and still buy the dip. Now, that, of course, is not going to apply to all the stocks, and the reversal in the financials is still very much expected if we analyze the history of their charts. Okay, guys, key takeaways. With Japan trading higher in the financials, moving higher pre-market, it definitely does lower the probability of the market reversal at this level of about 2,900. But it does not diminish the probability of the market reversal if the breakout does not hold and it fails. So we can expect the breakout to stop at maybe 29.10, 29.20 and reverse from there. Now, we're looking for further development in behavior of financials by the end of the day to see if they will hold the gains or reverse. This would be very, very critical. Number 3, we're considering Netflix puts, PNC puts. Be very careful if you are pulling a trigger in the money or very near the money. Number 4, it may be a difficult day to differentiate between market move 2 and 7, so be careful if you are buying puts, then buy them at the top of the range. Do not buy them on pullbacks, because so far what we have observed is the market is still coming in and buying these pullbacks, meaning the institutional investors. And number 5, it is best to wait for the next week, because, guys, the opportunities are going to be insane next week with all the companies announcing earnings. So it's best to wait before you put a ton of capital to work today. But do get in some, in some trades if there's definite signs of reversal development. So until then, we're going to keep monitoring the chart to get further confirmation on what is actually going to be the predominant behavior this market. Hey guys, some of you that are a VIP subscriber and maybe you're not trading as actively, click the link below this and save yourself some money. You can switch your subscription to this 13 market moves daily, and you can definitely save yourself some money by doing that. If you are a long-term trader, you can easily click the link below and upgrade to the service, because in the next few days we're going to go through some reorganization, some changes. So make sure, if you are wanting to make the most of this earnings season, that you click the link below. Take care of this now so you won't have to worry about it next week. Guys, some awesome opportunities are coming up. I look forward to talking to you in the next video. Make it an awesome day. Let's do this.